A warm welcome to all our members who are viewing BCAS Tax Gurukul online videos. This is a special edition where we are going to cover a glimpse of proposals which are being introduced in the budget by the Honorable Finance Minister. Also, we are going to take certain points in relation to notifications and circulars and various decisions which are recently been ruled in this particular phase of time. First, we will start with the proposals which was introduced in the budget. As we all are aware of, there has not been any change in the tax rates or surcharges or MAT tax liabilities. The only change which is introduced in this particular budget is where the marginal relief which was available in a form of rebate to the small taxpayers has now got extended, and the taxpayers who will now be having an income group to the extent of 5 lakh rupees will be allowed a rebate of 12,500 rupees. It's very important to note over here is one, the income group which is above 5 lakh rupees will not be able to take the benefit of this rebate. And the second point, this rebate is available only for an amount which is restricted to 5 lakh rupees. So even if the income is 5 lakh 1,000 rupees, the rebate will not be available and you will be subject to tax as otherwise the normal taxpayers are. There is one more change for the salaried employees. The salaried employees will be able to take a standard deduction which was earlier available as 40,000 rupees. Now you will be able to take to the extent of 50,000 rupees per annum. Apart from that, you will also be continue to claim deductions which are available under section 80C and similar other deductions which were otherwise available. The second proposal which was introduced in the bill was in relation to self-occupied property. So earlier, if I was holding 2 self-occupied property, the second self-occupied property I was supposed to pay tax on the notional rent. However, in this proposal, it is proposed that the second property, being a self-occupied property, you will continue to claim the relief on that and it will not be subject to taxation. It will not be subject to taxation. The third one is an important one, where in case if a residential property was sold and we were buying another residential property in India, you were allowed to claim exemption under capital gain. Now this benefit is extended, where the proposal says that in case if your total capital gain is to the extent of 2 crore rupees, you will be able to claim the exemption for investment into 2 residential property. Therefore, earlier which was available for 1 residential property, for this category of assessees where the capital gain is to the extent of 2 crore rupees, you will be able to invest into 1 more residential property and therefore 2 residential property will be exempt from taxation. This exemption is available once and therefore you will not be able to continue to claim this exemption every time. There has been a relief which is also provided under the finance bill to developers. So earlier, a developer who was holding unsold inventory, he was allowed for 1 year from the construction completion certificate, he was allowed 1 year where no notional rent was taxed. This benefit is extended to 1 more year. So now for 2 years, that developer will be able to take the benefit and notional rent will not be taxed. There is one more benefit relief which is provided for the developer who are developing affordable housing projects, where the approval which was getting completed, the approvals which were getting closed by March 19 has now got extended, and all the projects which are approved before March 2020 will be eligible projects for this particular benefit. Now moving on to the TDS. So Finance Minister has granted relief for the small and small investors who are investing into deposits, post office, where earlier even if they were not liable for taxation, there was TDS withholding, and therefore they were getting into hassle of getting the refunds. Now that is being waived off, and therefore benefit of the threshold limit for TDS deduction has been extended from 10,000 to 40,000 rupees for the investors who are investing into fixed deposits or into post office and similar other qualified investments. Similarly, the threshold limit for tax withholding on the rent has been extended from 1,80,000 to 2,40,000 per year. This is as far as the amendments which are in relation to budget. Now let us move on to certain new decisions which were ruled in the last month. The first one was in relation to Ooty Gate hotels, where the Cochin Tribunal has ruled that where in case of a slum sale, where the overall property along with business is getting passed on to the other assessee, it will be considered as slum sale, where the assessee was trying to argue that since the liability which was in relation to that property was paid off by him from this advance which was received from the slum sale consideration, that particular consideration was used for paying off the liability, and therefore the liability was not passed on to the purchaser, and therefore this should not be considered a slum sale. However, that was ruled out by the Cochin Tribunal, and they said that this will still be considered to be a slum sale. There is another case law which is in relation to municipal rateable value, where the Mumbai Tribunal in the case of Pankaj Wadhwa has held that municipal rateable value will be considered as the annual rateable value, and the value which is otherwise considered as expected rent by the assessing officer should not be substituted. Now moving ahead on certain circulars which are introduced. There has been a press release which was recently brought out, where they have said that Income Tax Department have found certain non-taxpayer non-filer of returns, and therefore they have requested that all the assessee who are liable to file their returns for assessment year 18-19 are supposed to file their returns within 21 days. There has been another notification which was issued for startup companies. So earlier there was a notification where startup companies who were issuing shares at a higher value were asked to pay, were granted certain relief. There has been a new notification which is introduced. The new notification is granting certain relaxation on the earlier benefits which were provided to the startup companies. Some of the benefits which I will just like to highlight over here is one: earlier the exemption was available only to the new investments which were made. Now that has been ruled out, and the exemption from the valuation is extended to the previous investments also. Startup companies were earlier required to take the valuation report from the merchant bankers. Now that particular conditions has been relieved, and therefore startup companies are now no more required to obtain a valuation report. There has been certain threshold limits which are rationalized, based on which certain more startup companies will be able to take the benefit of this particular notification. There was one more circular which was issued, where for the firms and private companies who were receiving shares by way of issue of shares, by way of bonus, or by way of a right of preference shares, there was a circular which was allowing those companies who were getting the shares at an inadequate consideration from the Taxation Act under section 56(2). However, that circular has been withdrawn and a new committee has been set up to evaluate the position, and therefore that benefit which was otherwise provided by way of a circular has now been withdrawn. These are some of the recent changes which has been brought out, which at a BCA platform we thought we should bring to the notice of our members so that it can be taken for their benefit. With this, I would like to end my session, and thank you very much for viewing this particular thing, and we hope you continue to view BCA's Tax Gurukul videos. Thank you very much.